ចិត្តពីផ្ទះដល់ខកចិត្តដែរអូ យើងនឹងមាន quiz BT ថ្ងៃណារស្មីប្រាប់ណាថ្ងៃ10ហើយព្រោះទី10អត់អីណាយើងនៅតែអត់តែចូលឆ្នាំទេប៉ុន្តែយើងសិនអ្នកនៅភ្នំពេញខ្ញុំមិនសូវជាបញ្ហាមែនទេនៅណាអូកណ្ដាលទៅនេះឡើយណាស្ដារឡោះស្រុកណាស្អាងមួយផ្លែនឥឡូវអូខេគេចូលឆ្នាំមួយណាយើងចូលឆ្នាំមួយទីម៉ានពី14ទៅមែនទេ14 15 16នោះអូខេព្រោះថាយើងប្រឆាំងជាមួយនឹងអីគេគោលការណ៍បរដ្ឋអូខេ we finish tax on incomes part 1 now we continue studying part 2 which we're going to cover recap a little bit about tax rate tax years tax years taxable profit on incomes this is very important identify deductible and non-deductible expenses do calculation of allowable charitable contribution limitation of interest expenses as you can see we need to learn about to arrive taxable and to get a taxable income or taxable profit which is the basis for TOI calculation we need to take into account taxable incomes deductibility expense non-deductible expense and charitable contribution tax law really not encourage business to do a lot of charity you see society want it but our Cambodian law designed not to encourage the business to do a charity that's our old legal systems here because we're from poor country we think about if we are poor we don't have enough money to even have ourselves why we need to have others simple as that so but now we're richer we should change but because a government announced we're going to be a rich country in the next 4 or 5 years right after 2030 right like I told you our government especially Ministry of Education announced all students graduate students will get paid $2,500 a month from after 2028 so now 2025 3 more years $2,000 a month graduate students okay we see the plans we feel optimistic but now around the world chaos with Trump new policy tariff increase Cambodian is the highest one we are 49% increase sorry 49% tariff for the export to the US okay yesterday I saw a letter from our prime minister to Donald Trump's request for negotiation hopefully we're gonna get it Vietnam make it clear they stop the tariff from the product import from US gonna be 0 okay so if we also 0 then we can drive American car here without paying tax okay so that's a good thing so because we love actually, Cambodian people love American products, but American product is so expensive because of the the cost, the production cost also expensive, and the tax also expensive, and that's why we currently we don't have it. But if the tariff down to zero, we only charge VAT 10%, then a lot of American product that we want to use gonna be cheaper. Okay, let's see. So, and the same thing for interest expenses. Many countries, they have this, what we call limitation of interest expense deductions. Okay, business need loans, most of them, maybe all of them. Only a few exceptions. Some company, they don't want to borrow monies, but many company will do this. But under the tax law, we have a limitation. It means we cannot deduct interest maybe 100%. So we have a formula how to calculate. And this too, number one, during the exam, this three part will play a key role. If you are unable to identify deductible, non-deductible, I mean, you cannot do the tax on income calculation, and you cannot probably pass the exam. Again, charitable contribution calculation, we will have normally 2.5 or 3 marks. Limitation of interest deductions, also around 2 to 3 points. Yeah. Okay. Let's move on to the topics we have. Okay, we recap again, tax rate, standard rate. This is for legal entities. We study about legal entity. We don't study about physical person. I already sent you the rate, right? The tax rate for the physical person or maybe individual business and the deductions. So the calculation basically the same as tax on salary. So if you, for a physical person, if you have a profit around 4,500, you don't need to pay tax, right? And up to 37,500, more than that, you're going to pay 20%. But for a legal person, we don't go with progressive rate. We have a flat rate of 20% on a taxable profit, or what we call taxable income. Oil and gas 30%, and other mineral exploration activities. Insurance 5%, QAP is 0% during tax holidays. Okay, tax years. We're talking about, you learn account, you say financial years. Yeah, we're talking about financial year. For tax, we call tax year. But usually, financial year and tax year the same. But sometimes different. If it's different, it's hard for us to actually paying tax correctly. Yeah, because you have your financial years, different from tax year. Then you have to do a cutoff. So then the problem happens is that revenue recognition and expense recognition. Sometimes you cannot, do it properly. So if your financial year and tax year different, most of the company will request the government to change. Maybe change your financial years. Easiest, the easiest way to do it. To change tax year requires some sort of a, effort to convince the government to actually, accept it. You have to meet certain conditions. Okay, so based on tax law, all real regime or estimate or sales-assessed regime taxpayer required to have a tax year from 1st January to 31st December. This is our law. Okay, so we follow calendar years. Yeah, our tax year follow calendar year, 1st January, 31st December. Okay, and they said for a new enterprise start of the business, so the tax year will end by 31st December. So yeah, if you start a business 6 months, 8 months, your first tax year gonna be 6 months, 8 months. So you have to have a cutoff date by 31st December each year. Okay, that's compulsory based on tax law. Tax year follow calendar year. Okay, as I said, if you are a Cambodian companies, you have no choice. You have to follow this tax year. You have to follow this calendar year. Okay, the exception only they understand for an enterprise, they may have a different tax year or they may have different financial years. But you can get the approval from the government only when you have what we call 51% of share owned by a parent company abroad. Yeah, which means if the share of a company which owned by a non-resident company, which is a non-resident legal entity, starting from 51% or more, you can request for a different tax year. Okay, but only company or maybe a legal entities. But if a shareholder is a physical person, a foreign physical person, you cannot change. Because if you are a foreign physical person, you are not required to declare, a corporate income tax in your home country. You are not required to prepare financial statements in your home country, right? Because they may require to pay what we call personal income tax, but personal income tax is different, right? Different from preparing a financial statements or maybe preparing a corporate income tax. And that's why only when a company, if a company, many country follow the same like us, no, not follow us, we follow them. Okay. Yeah, we're now required to file financial statement to a government body, what we call ACA, the accounting bodies. Yeah, we can request if you have that. So to change, because some country they follow their own, country law. Like in Thailand, their financial years starting from 1st October and by 31st September. The government budget also follow the same. Our government budget, yes, we follow calendar years. In Singapore, it depends on the, foreign investors. You can change whatever you want. In Singapore, doesn't really matter. But usually, I see they starting their financial year or their tax year is from 1st July and by June. Malaysia, many of them the same, follow Malaysia and Singapore follow the same track. Okay, so that's about tax year. So Cambodian, if you are Cambodian, really a Cambodian company, you have no choice, follow calendar year. Yeah. Okay, how to apply for different tax years? You said they require to have a letter from foreign parent companies confirming its tax year different from calendar years. You need a letters. Your head office have to, prepare letters, sign and provide to you. A letter from independent auditor of foreign parent companies confirming its tax year different from calendar years. Okay, the letter from the parent company alone is not enough. We need external auditor of the parent company, to prepare letters, sign and send to them, and a copy of memorandum of article of association of the enterprise identify the parent company. So they need, this is when we register a company, we will have to prepare this one we call memorandum of article of association, MAA. Or sometimes somebody will call MOA. Yeah. Because they combine, they said, starting from M, O, and A. Some call MAA, but the same. The full name is Memorandum and Article of Association. So this is a standard MOA or MMA established by the Ministry of Commerce. All company registered, you need to, to prepare that one. This is kind of like company policies, what you can do, to define the role of shareholder, to define the role of a board of directors, to define the role of accountants, to define the role of external auditor, what they should do, because the law, the commercial law, and the Cambodian law try to protect the interests of the shareholder, and that's why they need to have certain a role or a regulation to follow. Many countries they have the same, but some countries they will accept your own MOA, but you need to prepare once. Okay, which means the shareholder and the board of directors, agree on something. Okay, your role as shareholder like this. My role as a board of director, I have to do this, and then to define the role of external auditors. Yeah, whether the company required to have an external auditor or not, you can set that. Or if you don't have, what kind of a condition we should set out in our what we call memorandum of article of association. But under Cambodian law, it's hard for us to change from the what we call MOC standard. Yeah, it requires some sort of a skill, negotiation skill with the MOC. Yeah. Okay, but other country, yeah, you have the right to do that. The government, so the MOCs, it takes, I would say, what they are doing is like more than what they supposed to do. The MOCs mainly, it's just Ministry of Commerce is mainly just we call a register office. Okay, you will accept whatever somebody want to register. Your role is just keep mainly with respect to the company registration, just keep a documentation. Just certify or accept that you actually register properly. I will keep your document. They have no right actually trying to change or trying to amend what the shareholder and the board of directors do. But our system is like come from French systems. French legal system is different. The government have more powers. They have to review first before they accept your registration. So English legal systems, they say, okay, fine, whatever, because they put a claimer in there. They say, hey, whatever you default to me, I will accept. I just a witness, But the French legal system say, hey, before I accept, I have to review first. I happy with what you submit to me or not happy with. That's a different process. Okay, anyway, if you're a foreign entity, the document you need to prepare these three to request for a change. So the request for a change of tax year, first you go to the accounting bodies, and when you get approval from accounting body, and then you go to the GDT, tax department. So you have to request two different government bodies. You have two different application. Okay, supporting documents still the same, the three that I just mentioned, but the application two. You have two application, one to the accounting body, one to the tax departments. This is a general definition of taxable income, what we call taxable income. Taxable income, if you see this word taxable income, you're saying that it is a gross income, right? Income before deducting expense. Yeah. But I already, I mentioned many times, it's just about the terms. Other countries, they also use the same terms. And we negotiate double taxation agreement with other country, and that's why we want to use the term the same. So we don't want to confuse other country. Yeah. So taxable income is it's a taxable profit. It's taxable is. Sorry, taxable profit. This is still old term. Should be taxable income. It's the net profit obtained from. It's a net profit. So taxable income means a net profit obtained from all result of all types of operation realized. You see the word realized, all types of operation, see the word realized by the enterprise, including capital gains. Very interesting. We include capital gains. Yeah, we include capital gain from the sale of various elements of assets during the operation or at the close of the business, as well as income from financial or investment operation, interest, rents, and royalty income. So basically all of, like income from investment is a capital gain. Yeah, interest is a passive income, basically. Yeah, and same like rental, royalty income is a kind of passive income, but we include some. Why we have to have a explicitly states like this? Because all of this is a passive income. So some income will subject to withholding tax, right? Okay, like royalty, yes, it also subject to withholding tax. Interest still, right? If you are not a bank or financial institution, this is also subject to it. Rent, yes, except exemptions, okay, from financial or other investment operation, like from selling of share, selling of whatever, any kinds of investment asset. Some will subject to what we call capital gain tax. Okay, that's why they clearly define, because all of this income is not from a operational operation of the companies. Yeah, this is kinds of like additional income, because some company, when they have a lot of cash, then they start to think about, like a short-term deposit, short-term investment or something like that, try to increase the income of the companies. Okay, but all in all of this income must be realized. Realized means you actually get it. If not realized, it means it's not subject to tax on income. Okay. Then, as you can see, based on accounting, we record income both realized and unrealized. Is it true? Based on accounting, sometimes we're required to record some unrealized incomes, right? Yeah. You realize you must record, that is a compulsory, but some unrealized income also you are required to record. Can you give me some example of unrealized income that sometimes you're required to record in your financial statements? And notice payments. I'm talking about income, not payments. Huh? Commissions? What are you doing? What kind of business you are? Unrealized income, accounting. Not many, but yeah, you're required to record it. Huh? Unrealized what? No. If you say selling of non-current asset, the disposable asset, right? And you gain, you record. That's realized. Unrealized means you anticipate, or based on accounting rule, require you to do an estimate or use a formula which accounting rule want you to do. Okay. Okay. What is under you, not about tax. Okay. And asking about accounting. Okay. Name me a few accounts, a few incomes which accounting requires you to record when it is unrealized, which means not happen. Income, about income. And then next we'll go to expense next. Nhưng trong vậy thay nó account cái ao record của unrealized income. Nhé, cái đừng ra vậy. Thu bây giờ tròn, ở dân ở tụi ba này income nè. Ai nhưng tụi ba được ai mình tụi ba nó cái này nè. Chẳng bên này gì? Cái mình. Mấy? No, accrual income is something you complete. It means rely. Unearned is not an income. Unearned is a liability. You get money, but yeah. Okay. Accrual, which means you already perform a service. If you already perform the service, the good already deliver. It's been realized, right? Something you do nothing. Yeah, you just sit at the office. Unearned, you get money, but no service perform, no good deliver. You record as liabilities. Yeah. Yeah, evaluations. Yeah, sometimes you do evaluation. What is it? Okay, theoret. Okay. So, a few more. Yeah. Some investment, mainly investment assets, right? Investment asset, required to do some revaluation or maybe sometimes do impairments. Yeah. Yeah, you don't sell it. Yeah, you still keep it, right? One or two more. Anything that the thing is you're required to record, but it's not realized. Satir say, Theoret said it is revaluation. Yeah, I mean, provision is expense. What kind of provision? Okay. How about something related to exchange? Yeah. Yeah, unrealized exchange gain you require to record, right? If you have you're trading a different currency, right? That's compulsory. If you have like your accounting record in US dollars, but you have an Khmer Real accounts, you are required to convert, based on whatever estimate exchange rate at the GN. Yeah. But sometimes you may a gain, sometimes you make a loss. But now if from Khmer Real to US dollars, you may have a gain because now Khmer Real is very strong. The last week. Okay. Yeah, all of those unrealized, based on judgment income is not subject to tax because the law said very clear, said it must be realized. Okay, that's the rule. So remember this. So taxable incomes is the net profits obtained from all result of all type of operation relied by enterprise, including capital gains. Yeah. So we include capital gain as well. But we have a new law, what we call capital gain tax separately. But capital gain tax currently only apply on individual and non-residents generate capital gain from Cambodian investments. So, but if you are a legal entity, you generate capital gain from investment assets, you pay tax on income. One of my clients, they make a mistake. So they get a wrong advice from some accounting firms. Okay, because they sell business. Okay, they want to close business. But they don't sell share, they sell business. Remember, sell business, exempt from VAT, right? Do you still remember? We have to follow how many how many conditions? 5, right? Yeah. Okay. So yeah, he sold a business. Yes, business, selling a business. The gain that you get from selling a business is the capital gains. Business is an asset, business and asset. And then but actually they came to me asking me to confirm, the gain from selling a business is subject to capital gains. And I say that no, our law clearly said not a capital gain tax. It is income tax. Okay. Then I calculate they have a liability of $8 million TUI. $8 million. And he said, oh yeah, 8 million too much. They are listed company in Malaysia. So they want to manipulate their profits. They want to sell share. Okay. Okay, and then they asking me, they pushing me to provide advice. I say, no, I can't provide you advice, but my advice, $8 million tax liability here in Cambodia. Okay, they're not happy with me. They go to another 2 firm, not a big 4, but a second. They got 2 advice. They confirm, yeah, you are subject to capital gain tax. So the liability only 4 million. Okay, they save 4 millions. Okay. And they are listed in Malaysia, and then they sell a business. They have to declare to the Malaysian Stock Exchange, and then they attach all the document, the advisory work, or all the whatever from the consultants at the time. They upload into the stock exchange database, a website. Okay, after they managed to close, and then they asked me to do a TUI filings. I said, and then I calculate again 8 million. They are not happy. He said, no, cannot. I have a budget only 4 million. And then I asked them, how do you get it from $4 million? Tax liability. I said, oh, my boss decided to just, only pay for 4 million, not 8 million. Do whatever you can do. I want to pay 4 million. And I wrote an email to them. This is your decision. It's not mine. Whatever happened in the future, it is your fault, not my fault. I talked to the CFO in Malaysia, and they said, okay, fine. Okay, fine. Okay, I messed up. Okay, do whatever you can do. They use from 8 to 4. Okay, tech consultant can do, no worry. If you are an external auditor, you cannot do that. Yeah, tech consultant, I can do that. But I will need to have a separate letter to cover my liabilities in the futures. Okay, I filed 4 million, 3 months later, the tax auditor come to audit because they know. And then, actually I put my name as a tech consultant, and then they called me, Bong, why you calculate only 4 millions? Based on the audit financial statement, based on your tax return declaration numbers, supposed to be around 8 million at least. I said, I know, but the company want to pay 4 millions. Okay, no. And then, they conduct audits, and then they pull out all the documents that the company submit to the Malaysian Stock Exchange. They said, well, oh yes, not your fault. Actually, the other 2 accounting firm for, they show me, say, yeah, that's what that's what I thought too. So, now, they come with assessment. We pay 4. Then they come with an assessment on another 5 million. Okay, 4 plus some penalty and interest around $1 million. Okay. And I got a call with the group CFO. They have a group, they have many companies. Say, please have to negotiate with the tax department to reduce from 5 to some, maybe 2 million or 3 million. I said, okay, but send me a letter first. This group, that company that are listed, but the people work in that companies, it's not professional. Yeah, but as a tech consultant, I can do it, no worry. Okay, if you want me to do, which is not based on the law, Then I have a separate letter to cover my back. Okay. So yeah, as you can see, as a tech consultant, sometimes we can be flexible, you know. That's why I love my job. Before I really want to do to be a technologist, I told you, yeah, a few months ago. But after I study, you know, F8, you know, ACC F8, I say, oh, okay, it's a boring job for me if I only required to do whatever a law or rule telling me to do. And that's why I said, okay, I have a law, but I can do things which is not the same as a law require. If I can manage, you know, to explain with a good reason, to use with a good documentation, I can get away from, you know, from that law. That's my happiness times if I can do that. Okay, anyway, come back to this, you know, from income tax perspective, only the lies. So if you record unrealized, you have to take it out. Okay, now we learn what they said, income not taxable under 2I. Yeah. The company generates some income, sometimes realized, but not taxable. Okay, income liable to tax on salary or tax on fringe benefit. But that expense mainly. Income from rural government or government of any institution of the rural government, which means focus on entity. This is a government. Okay, this is we're talking about income of individual. If you already pay salary tax or fringe benefit, you are not required to pay more tax. So what does it mean? It means tax on salary and tax on fringe benefit is a final tax. You don't need to pay more. Some company generate income, they pay two time tax. Some 3 times, some country. Yeah. But our Cambodian law, they say, oh yeah, salary tax and tax on fringe benefit is a final tax. Government income is not subject to tax. Income from any organization that are organized and operate exclusively for religious, yeah, charitable, scientific, literary, or educational purpose, no part of assets or earnings of which is used for any private interest. Yeah, we discussed about it, right, during when we study withholding tax. So those organizations also exempt from withholding tax, and now exempt from tax on income. So those organization is not a taxable entities. They completely exempt. Okay. When is it? No, on Thursday, I had a meeting with the tax officer, discuss about this. Yeah. I have an associations, what we call a condo associations. Okay, you live in a condo, you have to form up an association to you know, to control the whole building, including the, you know, the people living in that buildings, you know, manage collecting, you know, membership fee, this and that, trying to maybe if you have a dispute or some sort of a fight amongst, you know, the unit owners, then that association will come to, you know, to compromise. Okay. We only have one association so far. We have 100, maybe 100 condo building, but we only have one association so far. So, and then the tax officer say, hey, that association, it seemed like a profit-oriented entities, you know, because they're collecting we call a membership fee from unit owner based on the size of the unit that they own. And then the association collects and then hire a company, we call asset management company, you know, to do all the cleanings, you know, whatever. That's should do to maintain the building is clean and last for long times. Okay, and then they say, hey, association is a generate income through collecting, and they hire subcontractors to do all of this. Association actually perform management activities. Okay, they need to pay VAT, and then they need to pay tax on income. But the purpose of association is required under the land law, the co-owned buildings law, is to just, manage, trying to, facilitate on some things on the operational purpose. So no earning is actually redistributed. Okay, he said, okay, and they register properly with the Ministry of Interior. Okay, they said, oh, I accept that. This is an associations. It seemed not a profit. It seemed not a profit. And then they discuss about no part of the asset or earning which is used for a private interest. They say, oh, yeah. For them, the private interest is focused on members of associations. So that association, they have 116 units. So then they have 116 members. Okay, that is the members they have. He said the 116 member is a private. Okay, and the private, what they can get from the association is not money, it's a social welfare, because there's association form up to operate, or look after the building, to keep the building clean and operational. Okay, for them, this is a kind of a welfare that they receive. This is interest. I said, okay, that's a new thing, that I learned from them. Okay, wow. Okay, the social welfare is a government top priority, right? To make their own people happy and healthy. Every country. I said, all country, why you have a government? Because government will run the country, make their own people happy, rich, happy, healthy. That's your purpose. If you say, I investing, I spend money just to make me happy, this is the interest. Where do you get it from? Okay, then spend a half an hour to debate this, and they say, okay, I understand. That's a new thing. They say, he said, learn from me. I said, no, that's learn from, you can learn from many people. You can learn from your own. Okay, so at the end of the day, yeah, I can get what I want. I say, at the end of the day, they say, okay, they accept that. Then it's a happy ending. But took like 1.5 hours. Not bad, 1.5 hours to debate, and then we get a result. So now that's association get QI exemptions. Okay, I'm happy. My Thursday morning. Okay. Okay, because why I explain this? Because you may face sometime in the future trying to debate what is a private interest mean. Private interest is focused on a number of people, especially management teams of the association or organization. Yeah, the same like you are a shareholder investor in the companies, you will gain the financial interest. Okay, when the company make profit. The same thing if those organizations generate incomes, pay expense, and they have surplus or they have profit, and this profit distribute to a management teams of that association or organization. Yeah, based on the law, this is some part of your asset actually distribute as a private interest. But if nobody get it, the members, even though it's a close, what they call a close-end associations, but that they serve their own member. If only have 116 or 150 people that they serve, everyone get the same thing. It means no part of the incomes of that association used as a private interest. That's the meaning of the law. Okay. Okay. So this is how you interpret the law. You know, it depends on the way you look, and that's why we have some debate. Yeah. Accounting the same. I have an experience recently. You know, I sit as a board of one of insurance companies, and they change from one auditor to another auditor. The two auditors have a different opinions, and they make an adjustment in different ways. And now, as a board, I sit as like audit committee, and then I have to sign off. You know, I have to sign off the agreements. The previous auditor, they come up the same amount of adjustment, but they said different. Okay, adjustment, which this is liabilities. They said a tax liability. And then when we change to another auditor, they said, this is not a tax liability. It is a insurance liabilities. And what you're supposed to do. And now but I have no choice, you know, forced to agree, because if we have a late audit financial statement submission, we get a penalties from the regulators. But now, okay, I'm trying to reach out to the two auditor, try to provide me more explanation how you come up with this, and try to find a real nature of that adjustment, so that if the regulator asking me, they going to ask me, not only me, but we have three people there. Okay, we have to explain. Yeah, because they are not going after the external auditor. They have to ask the board first. Why you sign off the audited financial statement when the external auditor make an adjustment which you don't agree? Okay. Now we have to come up as an internal audit committees at the board. We have to come up with statements, you know, and if the regulator asks, okay, we can submit and explain. Yeah. So yeah, the two external auditor, both of them from Big Four, KPMG and Private House, but you know, they are not a Big Four. Okay, but they used to work in those two companies, and now they work in, you know, a firm. And yeah, it's interesting. They send me the two external auditors send me a list of the explanation, but I don't have time to read. Maybe next week when I read it, then I will come. I try to I tell you sometime, you know, okay, crazy. Okay, so this organization number 3, if you want to get exemption, what you need to do is you need to request to the Ministry of Economy and Finance. Okay, you have to, you know, state about your goal and objective of the organization. What is your goal? What is your objective? Why you're setting up an organization? What do you want to do? Yeah, so explain that. It's not difficult. It's easy. It's a name and address of the resident who sit on the board of directors of the organization. So they need the address of the board. Where are you? Name and address of the directors responsible for operations of the organization in Cambodia, if that organization has connection to an organization outside Cambodia. So this is focused on international non-profit non-government organizations. But if a local NGO, what we call local NGO and international NGO, if local, all of them is in Cambodia. If international, the board may not reside in Cambodia, but you have to appoint someone, you know, acting as a responsible directors. Then we need source and use of all funds attributed to the operations. So you need to tell them where the money from. Where from? Yeah, because NGO, right, you come up with a budget. and you come up with a budget, how much you want to spend this year, $5 million. Okay, what is the detailed expense that you have already, and you know how where you can get 5 million from. Yeah, you have to tell them asset health in Cambodia by the organization and parent. So they said also want the parent, but this is can be exempted if you are international organization currently, but asset held by, which means car, whatever you have. Chart of account of the organization. Yeah, they want a chart of accounts. Okay. This chart must be separate from the chart of account of any related organization located outside Cambodia. That is good. You only need chart of account, like account numbers, asset record, which number, whatever, liabilities or or funds or something like that. Okay. If you want to get exemption, you have to prepare all of this document and information. I don't think that's difficult. All organizations have it. So, but including association or any non-profit entities. Okay, they also include, so all of this entity also exempted from income tax. Income from any labor organization or any chamber of commerce, industry, agriculture, in case one income of this organization. Yes, same. And next, income or profit from sale of agricultural products that a person who is not a real regime. So it's a farmers, all farmers. But they said habitual agricultural work. Yeah, some farmer, they own a big land, a few hundred or 1,000 hectares of land, right? I used to ask you whether your parent is a farmer. You say no. Yeah? Okay. Yeah, my parent is farmer, but not a big land, very small land. And that's why I have to come here. If I have a big land, I will not come here. Yeah. What? If I have a big land, do a farming is very fun, to me, because I grow up, I do a farming, but the land is so small at that time. Now it's still small. It cannot grow because I come here, so I don't, and then we don't do farming anymore. Okay. Okay, but it doesn't matter how big your land is. If you do what we call habitual agricultural work, then you don't need to pay tax. Sometimes you generate not just 100,000, sometimes a few $1 million a year, right? Some farmer they have that. Okay. I think my relative, mother relative, they're all farmers. They're all farmers, including their children too, because they have a lot of big lands. Yeah. Only my parent not, because they are a soldier before, like I told you. They are living in Khmer Rouge, and then after the war stopped, so no land. Okay. Next, income from what we call rent of a house or lands belonging to a person who is not subject to regime. So yeah, you have a properties, a land or a house, you rent out. You actually do business, basically. You generate income from renting out your properties, but that's income is not subject to income tax, but it's subject to, do you remember? Huh? Withholding, or withholding only when you rent your property to a real regime, right? They deduct 10%. But if you rent to a non-real regime or non-salary taxpayers, then you're required to pay what? No VAT, Still 10%, but name is different. You know. No, not French. Still 10%. They said property rent tax, property rental tax, or house and land rent tax. Still 10%. You know, when you have a land, I used to ask you, do your parents has a property or house rent or not? Because we study withholding tax at the time, right? I tried to say they have a table. Okay. Anyway, still, if you rent out your land and house to the real regime or seller says, yes, you pay withholding tax 10%. But if you rent to a non-tax register, as a house owner, you are required to pay what we call property rental tax, still 10%. And that's why they said those income is not subject to tax on income, but of course they're subject to house and land rental tax. Okay, what about income from the rental of a house or land record in the balance sheets of a regime? If a company owns a house or a land and rent out, this income will subject to TOI. Yeah, they make it clear right here. Okay. Yeah, we have like in Cambodia, we have like tax on income, or what we call direct tax. Now we have 4 or 5. Okay, salary and fringe benefits is the tax on income type of it, but that we tax on the employee. Okay, we have withholding tax, we have income tax, and we have what we call capital gain tax. And also we have what I just mentioned, house and land rent tax. So 5 different income tax. Yeah. Sometimes you confuse. If you say, I have a property, I rent out. Okay. If then you have to identify who you are. Are you a company? If I'm a company, I pay income tax. If you are not a company, you pay house and land rent tax. Okay, regime. This is TY. Okay, you see how many organizations that is exempt from income tax? Once employee, you exempt from income tax, but you pay tax on salary or fringe benefit. Government don't pay tax. Charitable non-profit organization don't pay tax. But they need to request for it based on law. Next is association. This is associations. And then farmer. It's not a farmer, you know, some individual real estate developer. You know, sometimes you have some money, you invest, you build one house, and then you rent out. You build another house, you rent out. You build another house, you rent out. You are not required to pay income tax or VAT, but you are required to pay only what we call house and land rent tax. If you rent that property to a non-registered taxpayer, if you rent a property to register, you also required to pay tax, but not house and land rent tax. You pay what we call withholding tax. Okay. So, do you want to do this business? Individual real estate developer. Yeah, tax under the Cambodian law allow you to do. You know, you don't need to prepare financial statements. No need to submit anything. Yeah, you only required to pay 10% tax on your income. It's a good business, right? You can relax. Okay. Well, yeah, many Cambodian people doing this business. Yeah, that's why that a lot of people have a lot of properties. You know, they bought a property when it is cheap, and then they develop and then rent out 1, 2, 3 of property, and you know they make a few, maybe $10,000 or $20,000 a month. Yeah, they can enjoy the life here. Okay, we discussed about what is definition of taxable income, which is a net profit derived from operations, include capital gains. We're talking about income that is not subject to tax, but mainly focus on entities. Yeah. And we talk about tax year. We follow calendar years. You can change your tax year only you are a foreign companies. So to become to call yourself as a foreign company, if the company owned 51% by a legal foreign entities. Okay. So next we're talking about business income. We're talking about taxable income. Now we're talking about business income. Taxable income is a net profit. How about business income? That's it. Business income is the income based on accounting rules. It's a religion taxpayer must comply with general rule of accounting. For the purpose of TOI, before we call TOP, TOI, an income must be reported in the period in which it is earned, whether it is already paid or not. Yeah, which is accrual basis, right? Because people will confuse. Many people still confuse because we learn about the word realize under tax law. Realize. Many people will say realize only when I get paid. A lot of people will think like that. Realize means I get paid. I perform service, I invoice, but I don't get payments. It means not realize. Many people think like that. And that's why they say, okay, realize from a tax perspective is not really focused on the payments. It focuses on accounting rules, which means we follow accrual basis. Follow accrual basis. Yeah. Many countries, they tax on cash basis. The word rely, for them, only the company get paid. The money in the banks. If no money in the banks, you don't need to pay tax. But our tax law say no. It doesn't matter you get paid or not. If the accounting principle asks you to record incomes, yeah, this income is taxable from Cambodian tax perspective. And that's why many foreign investors come to invest in Cambodia. They have some sort of what they say they, find it hard to understand. Sometimes they generate a lot of money they record in the books, because for them they want to show off. Many companies, especially listed company, they try to put, they try to record income as high as much as they can. But they didn't know that they have to pay tax if they record. Yeah. Okay. I just got a client which they record a big income, but they don't get monies. They have to wait at least 8 years to get monies. And then that's based on IFRS 16. Require them to record a huge income, but income is not realized from from realities. So they have to wait at least 18 years to get that income. So and then now the tax department come to audit, and they come with a tax assessment of around $30 million plus penalties. 30 million, 30, for 1 year's tax liabilities. Okay, a lot of money. Okay, so how you going to explain the term what we call taxable income and business income? Taxable income, they focus on profit from realized only that you need to pay tax. But for a reporting purpose, you need to follow what we call income. You follow what we call business income, and the business income is accounting. So you have to report to them realized and also unrealized income. Okay, if you don't mention this, you say, okay, something not realized, I don't report to you. I only record in my books, but I don't need to record to you because I don't need to pay tax, right? Yeah, you can say that because you don't mention anywhere that I require to report based on accountings. Yeah, but now they say, okay, they don't call this as a taxable income, but they call business income instead of taxable income. If they say taxable income, please, this is a realized income. If we're talking about business income, combine realized and unrealized. Okay, that's for mainly for reporting purpose. Okay, now we talk about type of incomes. We discussed on Thursday, right? No, Monday. Yeah, we don't have class on Wednesday. Okay, I have to go to the province, do some family commitments. I actually don't like Chinese, but I have to do it because my mother changed me. Chẳng thuê nhưng mà ở thuộc riêng rồi sao nhưng mà đây ở thuộc ấy riêng rồi sao mai khỏi mà ở thuộc nấu ô bạn ở chơi và chấp vào riêng rồi luôn ở tại đây rồi sao là khỏi mà ok tập có xua đi nhưng mà bạn ở chơi còn đó còn Tesla vậy không hay ấy nè ở chơi chỉ cùng ru con trao xây nè cùng ru phải sụp đó là chẳng có tha có xua với cái question thà cho lỡ con này group sẽ cái Phật sát na rồi sát na cái nhóm tha nhóm Phật sát na cho bây giờ sẽ ở thủ nhóm tha cho Phật sát na cho bây giờ ở thủ là sao con nhóm riêng nó là cử chẳng có sẽ là question rồi nữa chẳng vậy ai phục đấy có tha ai còn dây việc bật chất bật chiên chẳng vậy ok phần mình riêng rồi cho năm bờ mình p này mình tao hay cho từ từ sọc p nó ọt tao ở bàn việc đôi ok ở thủ đó ok. Okay, type of incomes. It's income from supply of good or service. And if income from main business activity, bây giờ đây em này kia bậc mất. Là ba mẹ bậc không ấy, những mốc so chân này. Ba. Nè, này khác mau như năng phó và sẽ chân là đi. Anh này khác. Ở đây. Thực ra cho cơ thể đã so cái chânอย่างอย่างmau sang miền chân đây bữa nay đã class size cái Facebook là mau chân cái post okay. Okay. Với our tax law divide into three different parts. One is income from supply of goods and service. This is income from main business activity. And then we call subsidiary income. Income related to what we call not related to main activity, but income from immovable properties, security and shares. Okay, all of this now delete. Why is still here? Yeah, this one too. Royalty, okay. I said income from movable property. Remember, I told you on Mondays, from rent or provide free of use, of your asset. And royalty, another one is, income from royalty. They said rent or given for free of use, use for free by employee, third persons, or improvements made by rentees. Given for free to employee. If you give free use of your property to employee, okay, a company need to record as a taxable income, but at the same time, employee required to pay fringe benefit. Yeah, we study about fringe benefit, right? So then we pay two tax. Employer pay income tax, employee pay tax on fringe benefit. Okay. Okay, can we claim as deductions? Cannot. Because you don't record fringe benefit, right? If you buy free, no record. But both parties required to pay tax. This is not a advisable tax. Sorry, advisable transaction. Okay. What you need to do? What do you need to do to save some tax? Let's say if we provide free of use of property. Let's say we assume that property based on rent, right? If rent 1,000, then we need to pay TUI. Yeah, if the employer have to make an adjustment by reporting, they generate $1,000 income per month. Then TUI 20%, we multiply by, we pay 200 per month. If 12 months, it's gonna be, okay. Yeah, I put it 12 months. This is per month. Then 12 months is 12,000. The tax, the TUI will be 400. And then we pay FBT, another 20% on 12,000. So we pay another 24,000. Yeah. To the tax department. So this is employer TUI, employee FBT. So total we pay government. Okay. So this is a not advisable transaction. What we can do to minimize the tax? Of course, we have to think in the situation where we also require employee to have it. We have our own properties, but we want to minimize tax payments. What you're supposed to do? Yeah, I heard something. Give money to employee, and then rent our properties. We give them this money. Okay, if when we give this money to them, we can record 12,000 expenses. Okay, we get back the 12,000 as a rental income. Then we record 12,000 as a rental, and then we deduct another 12,000 expenses. Then no income tax. We only pay fringe benefit, only 2,400. Okay, whether we give money or not give money, we have to declare 12,000 as income anyways, right? Why not just give them cash? 12,000, and then if we have a cash transaction, then we can record expense. If no money out from our account, we cannot record as an expense. Then keep cash. $12,000 as a fringe benefit. Okay, then rent our properties, paid us back 12,000. Okay, we record as 12,000 as income. Okay, we have income, then we have taxable income. $12,000, and then we deduct fringe FB. Yeah, FB expense another 12,000 because now we can record. Then zero. No TOI. TOI equals zero. Yeah. Okay. If we don't give them cash, from tax perspective, we need to record 12,000 as income anyway, and then no expense record, then we pay full tax on income which is not recorded in the book. They say when you do tax calculation, we say we have to do what we call adjust taxable income not recorded in accounting books. So if you give for free, no income record based on accounting, and also no expenses. But from income tax perspective, from fringe benefit tax perspective, you need to pay even though no cash transactions. If no cash transaction, you end up with paying more tax. But if have cash transaction, you pay half of it. Yeah. Okay, but many people confused. You know, I talk to many people say, why I have to keep cash? This is my expense. I say, yes, you have a cash outflow. Okay, that's fine. But at the end of the day, you get it back. The company get the cash back. And if you do this, you pay lower tax. If no cash transaction, you pay more tax. Okay. Make sense? But if you're talking about accounting, it's no, if I cash, I lost my money. Okay. Do calculation. You know, a lot of accountant, sometimes I explain how to minimize tax. You know, actually many good accountants, they're good in numbers. I'm not really good in numbers, you know, but what I'm good at is I'm thinking of, you know, at the end of the day, how much tax I have to pay. If I can find a solution, say at the end of the day, I pay low tax, you know, then that's what I do. Okay, that's why I work with accountant. Okay, give me your projection of income and expense for a whole year. Send it to me. Detail as much as you can. I will get back to you. You know what you should do. Okay, based on your projection, this is the amount of tax you need to pay for a year. Okay, I want to change this, change that. This is your tax payment you need to pay. Okay, if you reduce your tax payment, it means you maximize your incomes. Yeah. Very good for if you want to get a loans. You know, if you want to get a loan from the banks, you want to have a maximum profit, right? If you have lower profit, the bank will not give you a loans. Yeah, because you are poor. You don't have income from bank perspective. It's a poor people. Okay, given for use for free to third party, you know, still consider as receiving income and non-deductible expense. Yeah. Okay, it's fine. This is invoice. If you give to the third party, okay, this point, okay, employee you collect, and then you pay 2 tax. Yeah, they get 2 tax. Here also they can get 2 tax. Why? Because you're a asset. Maybe you claim depreciation. You claim depreciation, right? Expenses, and they say, hey, if to the employee you pay income tax, and when you don't get money, you pay fringe benefit. Okay, I got 2. Fine, I'm happy. But this time, give to a third parties. gives you a third party no fringe benefit because they are not our employee. Let's say, okay, from income perspective, you still need to record, let's say, 12,000 to record income 12,000, but I know you claim depreciation expenses because this is your property. You said, then claim through depreciation. Okay, I know you have a depreciation of, let's say, $6,000. Okay, this depreciation is not a tax deduction. Okay, if it is not a tax deduction, they take your expense out. And then your profit will be increased by another 6,000. Okay, if your taxable profit or taxable income increased by another 6,000, then you end up with paying TOI more than you can claim, right? And then you pay another TOI. Okay, this TOI on the unrecorded income is 2,400, and now you pay TOI 20% on disallowed deductions, another 20% on 6,000. 6,000. So you pay another 1,200. Okay, you pay number one and number two, 3,600. Yeah, they are smart, right? Yeah. I say, under tax law, no free. Even your friend, your parents charge your parents with a smart discount. Okay. Next, improvement. Okay. You rent out the property to someone, and then your lessee see that your property is is not in a good condition, and they decided to do an improvements, not repair and maintenance, but improvement. Repair and maintenance we call as operating expense, right? If you do it, you call it operating expense. But property improvement record as part of the asset cost, right? You have to record as an asset, include as a capital in the capital. So then, if your lessee do an improvement, so now your property, when you rent out property, let's say your book value is 300K. After they do an improvements to your properties, your property book value increase to 400K. Okay. Now you, based on tax law, you make a gain of, yeah. Okay. And your lessee say, hey, I do improvement for you, but I don't charge you. I don't collect any money from you. I will spend my own. Okay, you are happy. I know you're happy. I also happy. But of course, you have a gain of 100. This 100 was subject to TOI. Okay, 20% on 100. Yeah, you pay 20,000. Okay. But still, okay, of course, it's fine, Somebody gives you $300,000 and you pay tax 20,000, you can keep another 80,000. It's a happy ending, right? Okay. But based on this, not happy because you don't get anything and you end up with paying all taxes, additional tax. But here you get some monies, you pay some tax, it's okay. Yeah. And okay, we include this. At the moment, I already explained to you, we delete whatever security, blah, 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 alternation, grant. We will keep immovable property, we keep royalty, and then we keep another one, subsidy income, sale of scrap, waste, rental of business equipment. Yeah. And the rest is other incomes. The rest is other income. So we divide into three: income from selling of goods and service, subsidiary income, which include royalty, rent from immovable properties, and royalty, yes, sale of scrap waste, and rent of business equipment. You can see a lot of other income here. So we learn on Monday, we learn about PTOI, prepayment on income tax, and minimum tax. They are using the same basis, which is turnover. So turnover, we include only income from sale of business and sale of goods and service plus subsidiary income. So other income is not part of PTOI or minimum tax. So you can see a lot of other income here. But accounting, we only split into two, right? Income from sale of goods and service, and then other income. Okay. But this law we just introduced back in 2020. Before 2020, we only have two different types of income: income from main business activity and other income. Okay, but yeah, the taxman want more money, then they expend more income. Okay, 9 now. So you don't need to learn about other income. What you need to learn is income from business and subsidy income. So the rest is all other. So the list here may not, you don't have it, but you have a different. But as long as you understand income from business and income subsidy income, you just say the rest is other income. Okay, so we're done with taxable incomes, tax years, business incomes. Next, we'll learn about what we call business expense. Okay. Next is next Monday. Okay. Okay, so yeah. Finish for today. See you again Mondays. Okay. You only have one class, right, today? With the tour. Okay. That's fine.